This is the city of Singapore. Located in Southeast Asia, it's a pretty small nation by size, holding only 740 square kilometers. It sits on the Malacca Strait and is one of the only few nations that gained independence involuntarily in 1965 after being kicked out of Malaysia. However, its size and the fact that it's a relatively young nation does not determine its worth. It's home to around 6 million people as of 2025 and has a very strong economy, boasting more than half a trillion GDP, the fourth largest GDP per capita in the world, as well as a high HDI index. Though it's struggling with some inequality, it's still on the forefront on human development.
Over the past decade, both Singapore and Hong Kong have seen major changes in the housing market. In Singapore, prices rose up about 44% between 2014 and 2024, while in Hong Kong they dropped about 140% to 2021 before decreasing by 30% in 2025. On supply, Singapore housing market has slightly fell from 82% to 77%, whereas housing stock of Hong Kong has slightly increased of 1.3% over a 10 years period. Singapore condo rents have climbed from $3,200 to $4,200, while in Hong Kong, the rent index has almost doubled since 2015.
Singapore housing market has become a case of demand recovering faster than supply, but general population growth rebounded above 2% when borders reopened in 2022, whereas housing supply lagged at 0.65%. This excess demand pushed both resale and rent prices up. Meanwhile, rising incomes reinforced affordability. GDP per capita increased from $58,000 in 2014 to over $90,000 USD in 2024, increase in demand. But when soaring interest rates spiked about 3.5% in 2023, borrowing costs surged, slowing demand, exhibiting an example of interest-elastic housing demand. On the supply side, Singapore faces structural land scarcity, making housing supply inelastic. Construction labor costs rose sharply post-2021, shifting supply and raising prices. However, recent policies aim to restore balance. The government is launching 55,000 built-to-order flats by 2027 with shorter waiting times in order to moderate the resale prices by to align price growth with income growth. So over the last decade, the pattern is clear. Demand expanded quickly, supply lagged, prices rose, and now the targeted intervention is helping markets rebalance.
In Singapore, around 91% of residents own their homes and over 80% lived in public flats, so property acts both as a basic need and a long-term investment. Short-term rentals are banned under 3 months for private units and 6 months for HDB flats, so tourists cannot easily rent homes. With 6.5 million visitors in 2024, that demand stays in hotels instead of pushing up local rents. Finally, the government keeps a very close hand on the market. About 54,000 new private units and 55 new public flats are on the way, while still strict rules like the 55% TBS ratio and a 60% tax on foreign buyers make sure speculation stays low. Controls keep the Singaporean housing stable, affordable, and focused on residents first, investors second.
If we look at Singapore's private housing market, which is the only segment open to foreign investors, prices have grown steadily, about 3.8% per year over the past decade. That shows long-term strength and stability. But from an investor's point of view, the short term looks much tougher. Rental yields sit around 3.3%, while the supply of new homes is rising and vacancy rates have recently started to climb. That combination means limited short-term returns and a higher risk of oversupply. As per the government's cooling measures, one of the main taxes for foreign investors was doubled to 60% in 2023, and a longer resale holding period of 4 years now applies. These measures make entering the market extremely expensive and discourage resale profits. So, while the long-term fundamentals of Singapore's housing market remain strong, entry barriers are too high and short-term gains too limited. So investing right now would make profitability unlikely for foreign investors.
Unlike many other cities, Singapore doesn't need extra government intervention to make housing affordable. Its public housing system already provides accessible homes for citizens, while the private market is regulated to prevent speculation and artificial inflation.